For 2021. Joining us now for a first on CNBC interview is ARK Invest CEO Cathie Wood. Cathie, welcome back to the show. Good to have you.
Great to be here, Sarah. Thank you.
It's been amazing to watch your rise and your funds rise over the last year, and yet the past few weeks have been absolutely brutal. The ARK Innovation ETF down 31% from the recent highs. How concerned are you about these rising interest rates and what that's doing to a lot of your high growth companies and the questions about valuations?
Sure. Well, we've been struck that the market never priced in 0.5, 1, or 1.5% interest rates. We think the market never believed interest rates would stay down here. And so it over time, we believe, has used sort of a normalized 3 to 5%. So we don't think that is why the market is correcting here. We do think the speed of the increase in interest rates is scaring people. It became very comfortable in a low interest rate environment, nothing much changing, the Fed has our back and so forth, to become involved with the market. And I think this has shaken a lot of investors up, maybe perhaps. And I would say even in the bond market in particular, we've been in a 40-year bull market in bonds. So I think there's a lot of confusion, and I think there's a little bit of paralysis here. I also think that there is a very rapid rotation now into value stocks. We've seen energy up year to date 39%, financials up about 16%. Those are traditional value sectors. And so I think that's been part of the reason for ARK's setback. But if I could add a little perspective to this, this happened to us in the fourth quarter of 2016 as well. Right after President Trump was elected, the stock market took off because tax rates were going to go down and so forth. And so the market started pricing in a very strong cycle, which was correct. In that period of time, our strategies went negative. And what I said at the time and what I believe now is that the bull market was broadening out to incorporate value or more cyclical sectors. And I thought that was going to be very good news for our strategy longer run. The worst thing that could have happened to us was another tech and telecom type bubble where the market narrowed so that only a few groups won. Right now, the market is broadening out. And we think in an underlying sense, the bull market is strengthening, and that will play to our benefit over the longer term.